Debt service coverage ratio, DSCR, answers one simple question. Does this property make enough money to pay its own mortgage? So let's look at a salary and rent example. If your rent is $1,000 per month and your salary, right, you earn $1,250, okay, great, you can cover your rent. However, if you only earn $900 per month, oh my gosh, you're in trouble, right? You can't even cover your rent. And now back to our property. Let's look at the math for our property. Okay, DSCR equals the annual net income of the property divided by the annual mortgage payments. And let's look at what different ratios mean. Below 1.0, the property is losing money. Okay, it can't, the net income is not even enough to cover the mortgage, right? This simply means that the property is bleeding money every month and you need to put in money in order to keep this asset, right? This is a major, major red flag. And next is a ratio of 1.25. This is the bare minimum that banks will accept, right? Here, for every $1 of mortgage that you have $1.25 in net income, right? So yes, it's approved. Yes, the banks will accept it. Sorry, my dog. Yes, it's approved. Yes, the banks will accept it. However, one major repair is going to cause you a lot of stress and potentially maybe put the whole asset in jeopardy, unless you have to make a capital call, which is like one of the worst things for any commercial real estate syndication or fund or whatever. Capital calls, a big no. And finally, 1.4 or higher. This is healthy and resilient. Okay, it's enough to cover the mortgage as well as enough to cover any potential surprises, therefore protecting your investment. And why should a passive investor or an LP care about DSCR? Well, as someone providing capital, the DSCR is like an early warning system. So let's take a closer look at what a strong DSCR means. And when I say strong, again, I say 1.4 or higher. Number one, your cash flow is more protected from, unexpected costs or vacancies. Number two, the deal is less fragile if things like the market or interest rates shift. And number three, the operator has a built-in cushion to execute the business plan without immediate distress. Yes, so a high DSCR is a sign of a more stable and durable investment. And I don't know about you, but for me, a safety cushion like this gives me much more confidence in a deal.